It's March 11th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor wants us to know there can be only one. And guess what? After yesterday's performance with Stretch, there is obviously only one. And Michael Saylor says year-to-date strategy has achieved a Bitcoin yield of 1.2%, generating a Bitcoin gain of 7,826 Bitcoin. That's $551 million. Bitcoin gain is the closest economic analog to net income on the Bitcoin standard. This is 551 million. A lot of people are going to be like, 1.2% doesn't sound like much. 551 million sounds like a lot. That's what happens when you have such a massive capital stack like Michael Saylor has acquired, like Strategy is higher. Chris says, the people that criticize the lack of demand for Strife, Strike, and Stride are exposing their own ignorance. It is clear that the demand for those products is simply migrating to Stretch. The lack of demand for Strife, Strike, and Stride is not in spite of Stretch, but because of it. And this just validates why Stretch is really the iPhone moment. Michael Saylor is all in on Stretch. Fong Lee and Strategy, they are all in on Stretch. You're about to see some numbers that are going to blow your mind, and it's all about Stretch. So Chris says, what Steve Wozniak was to Steve Jobs is what Fong Lee is to Michael Saylor. Love that comparison. Although Boomer says it's probably more like this. Crazy times, crazy times. Ben says product market fit. What's he talking about? Well, he's talking about a record day for Stretch. We're talking 409 million daily traded volume, highest ever. 3% 30-day volatility, lowest ever. 99.78 1M VWAP, which is the highest ever. I did not misspeak there. 409 million daily traded volume. That is absolutely insane. Just in, says Bitcoin for Corporations, 409 million traded in Stretch today, the highest daily volume on record. Estimated ATM is roughly 2,492 Bitcoin added to Strategy's balance sheet today. This is insane. Just from Stretch, 2,492. Now that's estimated. Again, we'll find out for sure when the when the report comes out on this coming Monday. But I just want to say, if they acquired 2,000, let's just say 500 Bitcoin today from Stretch, they're typically going at least 3 for 1 right now. So we're talking that could be a total of 10,000 Bitcoin. Because if they went 3 for 1, then they would have gone from 2,500 Bitcoin for Stretch. They would have gone 7,500 for MSTR Common. That would have said a 10,000 Bitcoin buy just today. Now, the Bitcoin price action was not great today, so honestly, that might not be exactly where they end up, and that's okay, but that is absolutely insane. I mean, 2,500 times 3 is 7,500, and then you go 7,500, which would have been what they acquired on the MSTR comment if they went the 3 for 1, plus the original 2,500 they got for Stretch. That's 10,000 Bitcoin. Absolute insanity. And let's just look at what Stretch.live did. Didn't quite have as many Bitcoin as the other site did that I just showed you. But I'll tell you, one of the reasons for that is I don't think Stretch.live's updated the pre and post market yet. And so that's one of the reasons. But look, the user experience here, the UX can't even keep up with the amount of Bitcoin that was bought today. As you can see, the volume here during the market was 3.68 million. Of course, with the pre and the post, it was over $4 million. We'll have to come back here. Hopefully Stretch.live adds in a couple things here to make some improvements on this, add the pre and the post, and make this a little bit better of a user experience. But the in-day user experience is absolutely insane. And here I'll share the screen now to show you what I'm looking at, which is this screen. I mean, this site is honestly crashing right now. Okay, we're back. That site literally crashed. Like, it was insane. Like, again, too many Bitcoin purchased by Michael Saylor caused Stretch.live to crash while I was recording. Crazy stuff is going on here. And this leads to what Chris is talking about. The MSTR bears, they've been extremely quiet over the last week or so. Dare I say non-existent. Not surprised. I'm not surprised either. And guess what, bears? I've kept receipts. I have a whole folder waiting for you. Zink says a big player just entered stretch. Someone bought 70 million worth right before the close. You can see the massive volume spike in the final 15 to 30 minutes of trading on the chart. The question is who? A bank, an ETF, a billionaire, a fund? We'll find out soon enough. But here is that $70 million buy. Insanity. Stretch ended with $400 million in volume, its highest volume day since inception. Look at this week, Monday, or I should say Friday, Monday, Tuesday. What are Wednesday and Thursday going to bring? Only time will tell. Friday could be a little bit of a down day. We'll see, because that'll be the actual snapshot day. So people are going to try to get in, I think, before close of business on Thursday to secure the dividends. Adam wants us to know about the biggest story in finance. What can Stretch and MSTR do in 3 hours? Well, Stretch got strategy 1,081 Bitcoin. They are maintaining the same level of amplification. They are buying roughly double that with MSTR. That would be 3,243. And again, it'll either be double or triple. They're either doing 2 to 1 or 3 to 1 for MSTR Common to Stretch. That is 7.2x the daily Bitcoin mining supply in 3 hours. In about 3 hours, they may have absorbed nearly 0.5% of the entire day's global reported Bitcoin volume. And that is using reported exchange volume, which is much larger than truly available flow from willing sellers. Strategy will likely be buying over 1% of the Bitcoin trading volume every day at this pace. Do you realize what this means? The great orange singularity is here. Buy your Bitcoin before Michael Saylor takes it all. And luckily, I've got a lot of Bitcoin and I've got a lot of MSTR. James says MSTR's drawdown against Bitcoin hit the same level as the last cycle, 44%. Well, what does that mean? Time for a little bit of a run up. So let's flippin' go. And I've got this great video clip you're not going to want to miss. It's another great Stretch ad that Michael Saylor wrote. Stretch is for everybody. So let's sit back, relax, and enjoy this ad from Stretch.
Impress me. Pitch me some investment ideas.
How about yen-funded FX hedge into short duration USD credits? It can generate 1% return a year.
1%? Is this a joke?
I have SaaS software, security, services stocks that pay 4 or 5% dividends.
That's a lame return, and they will be wiped out by AI. Is that really all you've got? Did I hire the wrong person?
How about private credit? It's illiquid and obfuscated, but you get 6-7%.
Come on, tell me something I don't know. It's my birthday. Surprise me.
How about Stretch preferred stock? It pays over 11% monthly cash dividends, tax deferred.
Over 11%? How is that possible?
It's real. Stretch pays 11% dividends. It's awesome.
Dang, everyone would want that. I want everyone pitching Stretch to your clients, corporate treasurers, asset managers, old, young, high net worth, low net worth. Stretch is for everyone.
Stretch your income to 11%.
11%. Okay. If that doesn't get you fired up about what's coming, then I don't know what will. Let's sit back, relax. Michael Saylor's got some brilliant words for us as soon as we get back from thanking our sponsor. If you're building in the Bitcoin era, structure matters. Treasury strategy, capital allocation, entity structure, it all starts with a solid foundation. And when you're ready to form your business the right way, Northwest Registered Agent helps you do more than just file paperwork. With Northwest, you don't just create an LLC. You build a complete business identity from day one. That means registered agent service, a real business address, operating agreement, domain, website, professional email, phone number, and built-in privacy. No juggling vendors, no sketchy upsells, no selling your data. They've been doing this for nearly 30 years, and they're the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real humans who know your local laws and actually pick up the phone. Northwest handles everything in-house, which means fewer hands on your data and privacy by default for every customer. Don't pay hundreds or thousands of dollars for what you can get from Northwest for free. Visit northwestregisteredagent.com/JLD free and start using free resources to build something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/JLD free.
Okay, so right now, the retail investor, they have to choose between massive growth and a roller coaster that's pulling 9Gs.
Right.
That's Bitcoin, right? Or they have to take the S&P or the NASDAQ index and accept 50 to 20 vol with good years and bad years, but over time, 10% ARR or better. Or they have to accept a credit spread from an investment grade bond of 70 basis points, which means they're getting 4.5% interest and it's fully taxable as ordinary income. So, you're a California resident, you're either getting 2% on your Apple bonds after tax, 2%, but you feel safe, or you're getting 10 to 15% on your S&P and NASDAQ portfolio, but you're getting not much of any yield, and you're on a small, kind of a conventional roller coaster.
Mm-hmm.
Or you buy Bitcoin and you're getting 3x the roller coaster ride. You're getting better performance, but for the last 137 days, people think that you're crazy.
Yeah.
Right? And so those are your three choices. I think that the way that we break that logjam is we simply engineer digital credit. That's why that's been my passion for the past year. Can I actually take a 45 vol, 45 AR asset, which is Bitcoin, and strip 80 to 90% of the volatility off it, strip 80 to 90% of the risk off it, and let's give you something 4 to 5 times over collateralized. Let's create a double-digit yield. Let's do it in a way that's a return of capital, so you get tax deferred, or you get deferred tax treatment. So you get the benefits of equity, you get the performance of equity, you get the principal protection of credit or a bond, you get a defined yield, you get paid monthly in cash. If you want to reinvest it, you just reinvest the dividends back in the principal, and it becomes like a consistent 11% tax deferred growing asset. And when you want to get off the roller coaster to pay your kids' tuition or pay a tax bill, then you just withdraw your money or you sell, right? And for that to work, you can't have the volatility and the drawdowns of equity. You can't have the volatility, the drawdowns of Bitcoin. You need some credit instrument, and you need an issuer that's going to over collateralize it. And you need to actively manage that credit instrument so as to create price stability. And so I think STRC, or digital credit, in my opinion, is the way that we draw the next cohort of retail investors into the space. And I don't know why we couldn't draw 10 to 100x as many. I would think, if 2 to 4% or 2 to 5% of retail were able to, by the way, if you find 5% of retail that like Bitcoin, they're not going to allocate 100% of their capital to it, right? They're going to allocate some portion. So I think if we got 2 to 4% the first go around, I think we'll get to 20 to 40% with digital credit. And I think that is in a way one of the killer applications of digital capital. What's the second best? There is no second best.